Welcome back again to my YouTube channel. I know you guys will say, Richie, what's been going on? It's been long you dropped a YouTube video. Yeah, I know, I understand. It's been a while, guys. It's been a while I dropped a YouTube videos, and you guys know that I'm always good at dropping gems, like giving you information that will be so valuable to your trading skills, right? And for me to be able to give you a useful information that can help transform your trading career from being unprofitable or a new trader to becoming a professional trader and a profitable trader, it simply means that I myself need to acquire all this information and be able to break it down in an easy and simple way that you can be able to learn and digest the system and then replicate it. When you see it on your chart, you can be able to identify and trade with it. So guys, today I'll be teaching you guys a simple mechanical market structure system that I use to trade the financial market. This is a market structure that is really going to help and transform your trading skills to the next level. This is what we call the next level market structure. And trust me on this, guys, you know I deliver nothing but useful information in this financial market. So mainly today, guys, I'll be teaching you guys about how to identify your swing highs and swing lows. And as you all can understand, right, before you buy, your market structure needs to tell you to buy, right? So now the concept of market structure is the most important concept in trading. This is one concept that you really want to understand before you can click the buy or the sell button. Because why are you buying and why are you selling? The market structure tells you when to buy and where to buy from. And also the market structure tells you when to sell and also where to sell from in the market. The reason why a lot of forex traders fail from scaling from a beginners to becoming a professional trader actually is market structure. To be sincere, guys, I have seen over thousands of new traders charts, and I've seen over thousands of professional traders charts. That's the reason why I decided to come up with this market structure video at this point in time, because it is critical. One thing that I've been killing a whole lot of traders from scaling from being an inconsistent profitable trader to becoming a consistent profitable trader is market structure. So if you really want to learn something new, like something really new, like a piece of information that have been missing in your trading style or your trading strategy which concerns market structure, if you really want to learn this thing, stay till the end and make sure to click the like button, drop a comment in the comment section, and turn on the notification bell for more educational YouTube contents like this. So let's dive onto the chart now so I can break this thing down for you guys to understand. Hi guys, so you're gonna see me preview a lot of things on the screen. So from whatever you see on the screen, I would like you not to write them down now. I would like you to just take a picture of them with your phone. So I guess you're watching from your laptop, because that's the best if you want to really study something, or I believe you're watching from your laptop, so you can snap it with your phone and keep it. Maybe later you can then write it from your phone into a book. The reason why I'm saying this at this point is this: there is too many cents and keys plus secrets that I'm going to reveal to you about market structure, and you don't want to be distracted. Taking note at the same time, trying to listen, pay attention and understand. Taking note is a big distraction. So just take a screenshot of what you have on the screen right now for future purposes, right? So now, like I said earlier, the first and most important aspect
of the market flow of technical trading is identifying market structure. Yes, this is just what I do on a daily basis, guys, right? The first thing I do when I open up my PC to check on my trading view to analyze after checking up my fundamental. Yeah, guys, so before I analyze any currency pair, I always make sure that there is a fundamental backing. As a forex trader, you need to understand fundamental as well. It's important, it's crucial to your trading because it helps you a lot. You're seeing a broader picture, the bigger picture, how an economy is going, how the country is either expanding or contracting, right? Like we all said, right? So the first thing I do after putting up my trading view is I try to identify market structure, right? When we talk about market structure, this is the act of identifying the trending direction of a market so that we can trade in line with it. Pay attention. Earlier I told you guys that before you do anything in the market, you can only do two things. You can only buy or sell. Now, before you click the buy button, before you click the sell button, the market structure is what gives you the order of what to do and where to do it from. And if actually you're doing it from the right place, in line with the current market trend or current market structure, then there's high probability that the market will flow along with you. So now this is the act of identifying the trending direction of a market so that we can trade in line with it. Remember, we don't trade against the current market direction. Like, you don't trade against the market structure because market structure is king. Market structure is key, right? To identify market structure, we focus on the high and low points in a market and how price is now reacting to these previous highs and lows, right? Pay attention. I said to identify market structure, we focus on the high and low points in a market and how price is now reacting to these previous highs and lows. You understand, right? How is market reacting to the previous highs and lows? This brings us to where I'll be teaching you guys on how to identify your swing highs and swing lows, your strong highs and weak lows, right? So let's go over to the chart right now. I said first we want to identify the current market trend, right? So let's say, for example, price gives us a low right here, right? When price gives us a low and then goes on to give us a high, once we start to see a pullback, guys, remember, once we start to see a pullback, that's when we now consider this high to be a high, right? That's where we've seen a reversal point. So that's when we consider it to become what? A high. So in this scenario, we are first going to see price doing what? Pullbacks. Now, price does pullbacks because of what? Profit taking, and then people who are going short in the market. And price always pulls back to rebalance itself, to put itself in a place where buyers will find it attractive to buy again, right? And then once they trade into a level of demand, we are then going to get what? An impulse. Now, this impulse is going to lead to a break of structure, a break of the previous high, which we are going to consider to be a weak high in this scenario, guys. So this is going to be a weak high because it has been what? Broken. So since price has broken this previous high, we now consider it to be what? To be a weak high, right? Very good. And now for the fact that price failed to break this low will now be considered as a strong low. So in this case, that low will be considered as a strong low, right? Because price has failed to break that low. Rather, the low pushed price up from its demand zone to then further break that high. So in this case, we've seen price created a low and then a high, right? So we saw a pullback. The price did a pullback not because price was selling. One mistake a lot of us do is this. Once we see price trending to the upside on a higher time frame, and then we see like a push to the downside, if you step down to the lower time frame, this little pullback here, which we consider to be the internal structure, is just a mere pullback. It doesn't mean that the price, that the market have changed trend from bullish to bearish. No, price is only adjusting itself into a more valid demand level. We call this level a discounted price level. You understand? So let's use Bitcoin for example, right? Let's say Bitcoin, let's say Mr. Joe bought Bitcoin at the rate of 20k, right? And right now Bitcoin is at 70k. Now trust me, when price I think I need to go back. The write-up is missing, guys. I need to put it up here again. Sorry guys. Let's say Bitcoin, Mr. Joe bought Bitcoin at $20k, right? And right now Bitcoin is at $70k. So in this case, the way I'm going to do this is this low is going to be 20k, right? That's just how I'm going to do it now so you can understand it better. This low was the price of this low was $20,000. So Mr. Joe bought at $20,000, and what happened is that price has gotten to $70,000. The current market price is now at $70,000 on Bitcoin. Now you know that what moves the market? The market moves also based on greed and fear. When price is around 70k, this is not going to attract buyers anymore. And once it doesn't attract buyers anymore, the people who bought at 20k will start to exit the market. They will start to take profit and leave the market. Once this guy starts to take profit and leave the market, it simply means that the market will now become weaker, and then it will start to do what we call a retracement. When price starts to retrace, it doesn't mean that price is selling. It simply means that price is adjusting itself, is doing a pullback into a valid level where it will also do what? Attract more buyers. When more buyers enters the market, demand will pull price up. So let's say, for example, if price comes back again, let's say for example, if price comes back again to like $21,000, right? You're going to see a whole lot of traders will buy, right? These same guys who bought at 20k, they are also going to come here to buy, because currently now price is more cheaper than when it was at 70k. You can't compare those who bought low to people who are buying high. It's never advisable, right? So one mistake I see traders do is to enter for sales in a bullish market. No, you don't enter for sales in a bullish market. You're trading against the current market trend. You're going against the current market structure. You should wait for price to trade into a more discounted price level before you execute your buy position rather than selling, right? So one thing you need to know is this low is considered to be a strong low because we expect price not to break this low. You're getting it, guys? So we are not expecting price to break below this low, so it becomes a strong low. Why this high becomes a weak high? Because we are expecting price to break above it. You understand? We are expecting price to break above it, so it becomes a weak high, which is going to be a liquidity target, more like a buy side liquidity. Now let's go back here. I said to identify market structure, we focus on the high and low points in a market and how price is now reacting to the previous highs and lows. Right? Now, I also said market structure refers to the high and lows of the market and how they react to each other. So the basis of trend and flow of market depends on market structure. Number one, we have uptrend. Uptrend gives us a series of higher highs and higher lows. And number two, we have downtrend. Downtrend gives us a series of lower highs and lower lows. Right? Now we have two types of market structure, or let's say we have three types of market structure. One is not included because it's not really important, but I'm going to explain that one to you when we dive onto the chart. Right? Remember, we have the impulse, which is the swing structure, and we also have the pullbacks, which is the internal structure. Right? I said we identify the highs and low points in the market and how price is reacting to them. So in this case, guys, this is going to be my low point, right? And also this is going to be my structure high. So in this case, the legs to the upside, right? The legs to the upside are my swing structure. Do you get now? The legs to the upside are my swing structure. Anything within this high and this low is what we consider as internal structure, which is a pullback, which is price adjusting into a discounted price level for a buy continuation. Let me explain. I said now to identify market structure, right? To identify market structure, we want to see how price is now reacting to the previous highs and low. That tells you the direction of price, right? So this was the previous low and this was the previous high. Now, the previous low rejected price and broke above the previous high, which means there are high probability that the highs will continue to fail and there are high probabilities that the lows will continue to hold. So let's say if we want to do a proper stop loss placement and we are entering off of a demand around here, let's say there is a demand zone just around here, our stop loss will slightly be below what? The lows, right? Our stop loss will slightly be below the lows. Why will our stop loss be below the lows and our take profit will slightly be above or at the previous or the recent high, right? So let's mark this area as our demand area, right? That's going to be our demand level, and this is going to be our entry point, our stop loss below here. Now you see this high that price gets to before it starts to reverse is what we call our internal structure, right? In this case, we are not really going to mark out the highs and lows of the internal structures, as they are simply creating liquidities above the highs that price will need to take out after coming into a lower pricing level like a demand zone. All these highs are going to be the buy side liquidity that will make price to impulse to the upside to do what? To take out this previous high. So in this case, guys, we don't look to trade the internal structure except you are very good at trading the pullbacks, right? We don't trade pullbacks. There are many reasons why we don't trade pullbacks. Reason is because price can continue from any level on the chart. It does not really need to trade into this low. It can then decide to just react from a flip zone here or a breaker blocks and continue to the upside. And if you were looking to sell, what happens to you? You will lose at this very point because your stop loss should be above the highs, right? So we consider every structure within the swing structure to be the internal structure, right? So in this case, we simply avoid the internal structure and pay more attention to the swing structure. So now, this is another bullish schematics. Let's say we have a demand zone and a supply zone. In an uptrend, all demand zones will fade, and in an uptrend, all supply zones will fade, and all the demand zones will continue to react, to hold until supply takes over from demand. So if you're looking to mark out supply zones in an uptrend to sell from there, your name is sorry. That's how a lot of us mark out the wrong order blocks, and then we think price doesn't respect it. You have to mark your order blocks in line with market structures, right? You have to make sure that you're entering from the structure lows, because these structure lows are considered to be in a discounted price level, an area where buyers will find it more attractive to buy than sellers, right? So in other case, the supply, right, in a downtrend, we continue to see the weak lows fails and the strong highs holds, right? So in this case, everything within here is considered to be internal structure, just a pullback for the continuation of the downtrend, right? So why should you be trading a pullback, right? I know a lot of people will do this. Once they see price drop massively, they look that price is now impulsing to the upside. Once price gives them some higher highs and higher lows, they will just draw their trend line and start looking for buys. It's totally wrong, because you're trading the internal structure, which should have been avoided in the first place, right? You're not trading the internal structure. You won't be aware price gets into like a more premium or supply level, and then the sell strikes to the downside, takes out all your stop losses, and then you lose. And then you'll be surprised. You think the market manipulates you. No, the market did not manipulate you. It was you that refused to identify what price was doing. It was you that refused to identify the level you should be entering from. You understand? So what you need to know is that When price is oversold, price need to adjust itself into a more premium price level where sellers can then start to look to enter for sales again. You understand, guys? So right now I'm going to take you guys and show you examples of some trades that I took in my Discord, right? In my Discord. So let's head over to my Discord, guys. So this is a trade I analyzed on AUD USD, guys, by identifying market structures as well. Now, if you look at the market structure here, you'll clearly see that price was in a downtrend. Price was creating lows and then lower high. We have a lower low, we have a lower high, we have a lower low, we have a lower high, followed by a new lower low. Now, this was the most recent high that broke this low and gave us a new low. Now, in this case, why am I looking to enter for buys from here? It's very, very simple. Looking at market structure, what you will see is that this low has tapped into a higher time frame demand zone. And now the impulsive move from that demand zone to the upside led to the break of a previous high, which is considered to be a change of what? Character, right? So in this case, if I take you to this this schematic right here, once price is giving us a break to the downside, and then price taps into a higher time frame demand zone, and then that demand leads to an impulsive move to the upside that breaks above the previous high, this simply means that the trend has switched from downtrend to uptrend, which we call a change of what? Character. This simply means that the buyers have now taken over from the sellers, and now demand zones will held while supply zones will do what? Will fail, right? So now let's head on to the chart for more clarification on that. So in this case, what I usually do is once I notice that price just creates a high above the previous high and the low created a higher low which is a bit higher than the previous low, then I'm going to start to look for a demand zone within the structure low, and that's where I'll be waiting for price to come to before I do what? Before I execute my trade, right? Now if you look closely, you will see what price did here, right? You see what price did. Price created a low, gave us a high, impulse back to give us what? A higher low, and to give us what? A higher high. Now I'm taking profit when price goes on to give us a new what? A new higher high. Once price breaks above this high, that was when I started looking for a new entry at this low. Now let me play it on the screen so you see how that entry was found, right? This was the entry. Let's go back. Let me see the time frame I took this setup. This is JPY. I'll explain this one to you guys as well. This is JPY. This was the trade. Okay, what time frame? It was on the 30-minute time frame, guys. I did that analysis on the 30-minute time frame. That was how I got that entry. I'm gonna do like a playback for you guys. I'm gonna do a playback. Where was just okay? I know where we were on that day. So this is where I was. It was in the night, right? It was in the night. I was just doing my own analysis to prepare myself ahead of the day. I was just doing my analysis, and then I came across this setup, guys. I came across this setup, and this is exactly how the setup looked as of then. Looking at these highs, these are trend line, right? These are trend line liquidities, which is considered to be the buy side liquidity. So this should be the reason why price should then impulse to the upside. So clearly looking at what AUD USD was doing, guys, I want to play this clearly for you to see, right? Now, if you mark out the highs, what you will see is this. You will see that we have a high, right? And also we have a low. That low broke below this low, making it a weak low, right? And now, after breaking the low, we had an impulse that gave us what? A lower high. Yeah, it's a lower high. It's considered to be a lower high because it's lower than the previous low. And then it also impulsed to the downside, giving us what? After giving us this low, right, which is a lower low, it went on to give us a lower high, and then it also impulsed to the downside to give us what? A lower low, breaking past the previous low. So you can see the weakness to the downside. All the lows are being taken out, while all the highs are being what? Respected, guys. So you see that we currently have a high here, right, that led to the break of this low. Then in this scenario, we then have price all the way to the downside, creating this high. Why is this a high, guys? This is a high because it led to the break below this low, right? This was a clear low. This was the low. This is also, this is the low. This guy also low being low, and this was a high being respected, right? Why did I not choose these highs? Because this is the highest high that puts in the lowest low, right? This high created an equal low. It did not break this low. That's why I did not see it as a high. A high must break the low. A low must break the high. For you to call a high, it has to lead to a break of structure to the downside. And for a low to be a low, it has to break structure as well to the upside, right? So in this case, we now have a high. That high as well gave us a low. Instead of this low to do what? To push up and then continue to the downside, not breaking above the highs, but rather breaking below the lows, what the price did was to give us what? A high, which is higher than the previous high. So in this scenario, what I now consider is that price has given me a change of character, because in this case all highs were being respected and not being broken. And right now in this case, price is already coming from a higher time frame demand, and it led to the break of the structure high. So in this case, this was where I now looked out to pick my order block, right? You know, we trade in line with market structure. So I pick my order block, which is my level of what? Demand. So let's play price, guys, and see how price played out throughout this section, right? This high is my take profit, guys. This high up there is my take profit. Up here, that's my take profit. That's where I'm looking for price to come to. So you see what price started doing. Price now taps into that demand zone, right? So in this case, price has given us what? A higher low, right? You can see it's just like that. It's just like that. Price has given us a higher low, higher than the previous low. Do you see? Now the uptrend begins to build, right? I also took another position at this point, because anytime price breaks a previous high, it does a pullback, right? So what we had was this push. It broke this previous high, we did a pullback for a higher low. Now we got to this TP level, we are going to do a pullback as well into this zone for what? For the uptrend to do what? To continue. So any demand zone that I find within this area is going to be the demand zone that I will be entering for price to create what? A higher low. So I'm expecting a higher low at this point. So right now I've seen a high. I believe you guys are getting value from what I'm teaching. Hope you guys you're trying to understand, right? You're trying to understand. So in this case, I'm expecting price to impulse back to give me a higher low. Remember, in an uptrend, we get higher highs and what? Higher lows. The most important thing is for you to know where the pullback will be ending for you to now look for what? Continuation. What I do is this: I use the imbalance concept, the supply and demand concept, and the liquidity concept to know the next valid level, either supply or demand, where price will be coming next, right? I'm going to show you guys example of my previous trade. So you see what price did there? Price came to this demand and pushed up, right? It pushed up, and then this was where I then took the second entry, right? And then what was that? TP smashed. You understand? And that's it. That's how the trade went. You understand? That's how the trade continued moving to the upside, right? You see how I was able to use market structure to catch these two beautiful trades, right? This was the trades on AUD USD. Now let me also explain this one. I just dropped this chart, right? But you can see how price is now reacting to the highs and low, and there's an open imbalance here for price to come and give me a higher low and continue for a higher high. Now let me show you guys more example of what I'm teaching you. I want to show you guys more example of what I'm teaching you. You can see all our trades. Our trades have been always running in profit because we know what we are doing. Yes, this is a Discord. This is my Discord, guys. I know some of you might be asking, Discord, yeah, this is my Discord. This is where I train my students. This is where I send my signals. This is where the magic happens. You can see every time I send a signal, I will always make sure to send the setup so that my students can learn from my setup. You can see if we go to the Forex chart, the Forex chart is where my students send in their setups and screenshots. You can see how these guys are trading. You can see how they understand the market. These are my students. These are what they are doing. Like, they are killing this market using this market structure. You can see how defined, how mechanical, and how easy this concept works, guys. So let's go back to my mentors chart. Now, if you look at this trade I took on gold, and this was the signal for gold. I told them quick buys on gold. I gave them the limit order as well, right? This was the limit order as well. So I sent it in here. This was a sell. I said it here. Sell limit order on gold. Entry price, stop loss, and take profit. This is how I sent my signals to my Discord, right? This trade the same thing. This trade. So let me break this gold trade down for you guys. Now look at this gold beautiful trade. What you will see here is this on this trade, right? You will see that we created a high, we created a low, price impulse to the upside gave us a lower high, and then to the downside to create a lower low, breaking below this previous low. In this case, I was able to spot liquidity slightly below my supply zone. Why is this level my supply? Because price is at a structural high. The supply is not within this structure, it's at the swing, right? This is where the pullback started. So this is the swing high and this is the swing lows. This is where the impulsive shift started, right? We have a pullback and a continuation. This is the swing high and this is the swing low. And every little shift you see between here is simply the internal structure. So price created a lower high, lower than this high, and pulled down to create a lower low, which is also a swing structure. Now I'm expecting price to impulse to the upside, not break above this high. That's why my stop loss is above the highs. But for price to come and give me a lower high and then continue to create a new lower low, and then I sent the signal to my team. Now this is when the trade played out. You see, price came in here to give us a lower high and is now continuing to the downside to give us what? A lower low. And this is the trade that simply smashed take profit. 360 pips, guys. This is a 360 pips on gold. You understand? I've simply been killing the market using this simple mechanical system of market structure to trade. This is just how I do my thing, guys. You can see example. Look at this supply chain. What you can see is price creating lower highs and lower lows, right? To the downside. You can simply look at market structure and understand what price is doing, where price will be coming and where price will get to, and then start to do what? Reverse. You're getting it, guys? Now, whenever you're trying to identify market structure, you need to know that market structure refers to the high and lows of the market and how they react to each other. So the basis of trend and flow of the market depends on the market structure, right? When we are talking about the market structure simply means this low, this high, this high, this low, and how price is reacting to this high and this low is very, very important in every concept, right? You need to understand this thing. It's something you really need to understand, guys. This is a strategy, or let's say this is a weapon for anybody who is willing or ready to kill the market. This is a weapon. I'm teaching you how to snipe, how to be a good sniper, right? Let's also take a breakdown on this Euro USD trade, right? I took this Euro USD trade on the 1 hour. What you can see here is that price was in a downtrend, and then at some point price started breaking above the highs. Price came into a higher time frame demand and then started to give me a high, came down, gave me a low, a higher low, which is higher than the previous low, impulse to the upside, gave me a new higher high, which is higher than the previous high. So what does this simply means? This simply means that I need to look for an imbalanced demand area where has been unmitigated for price to come and do what? Mitigate. Now if you look at, you see that this price returns to this demand, pushed up, returns to this demand, pushed up, return to this demand and pushed up. This is the only imbalanced demand zone that is left behind for price to come and do what? Mitigate. What I use here is just as simple as market structure. I just understand buying low and I also understand selling high in a bearish market structure. So in a bullish market structure, I want to buy low and not by selling, right? I simply wait for the market to pull back and then I look for an opportunity to execute my buys. Now let's see the end of that trade. Let's see how that trade played out, right? This is the trade. You see, the trade came into that demand and started buying massively, because when there is excess demand in the market, you see how price will continue to buy impulsively. Nothing can stop that buy because the buyers are now in control of the market, and every sellers will be taken out of the market because it is the bull time. The bulls are about to do what? Execute. So guys, if you really want to learn how to trade like me, you want to be in this Discord, because this Discord, I send in my trade setups every time, every day. You understand? Anybody who is seeing the way I analyze will already know how to trade. Look at this simple mechanical system of entry. I did this on a cryptocurrency pair. You see how it works out, right? It works out very clean, very neat, and price is simply giving us a new low, right? What can you see? We have a low, we have a low, we have a high. Price is meant to give us a higher low and then a higher high. Look at price. Price came back there, created a low which is higher than the previous low, and then price continues to buy until it got into a take profit. So guys, this is what I have for you guys today. Market structure. I hope you were able to find value in this content. Please remember to click the like button, turn on the notification bell, drop a comment in the comment section. Did you love this video? What did I not explain? What were you expecting? What did you get? And what are you expecting in the next video? Your comment helps a lot, so remember to drop a comment and also click on the like button, right? Subscribe to my YouTube channel and stay updated, guys. I'm coming out with more educational content for you guys.
Thank you so very much for staying with me all through the starting of this whole video down to the end. This really means that you are really ready and hungry for success in the forex industry. Kudos to you for staying till the end. I really believe you learned something new, and I've really put out a value out there that can really assist or help you in your trading career. And if actually you've really found value or you've gained something new from this very YouTube video, please remember to click on the like button, subscribe, and turn on your notification bell. And please remember, guys, if you want me to drop a new video, a new YouTube video, a new educational YouTube video, remember to drop it in the comment section. Be it liquidity concept, the imbalance concept, the supply and demand concept, whatever video that you have been looking for on YouTube, or a video you've been watching on other channels and you really don't understand, due to the fact that I explain things to your understanding and you believe that if I do videos like that it will help you, remember to drop it in the comment section. Thank you so much, guys. I'll see you guys in the next videos.